Hello, hello. Welcome to Ready Set Trade, or sorry, Ready Set Live. This is Ready
Oh,
Set
maybe that was
Crypto.
a Freudian slip
It
there. There we
was.
go.
We're gonna
Hey,
get to that in a
everybody.
sec.
How we doing out there? Welcome to the first annual Hunger Games.
Yes, yes. May the odds
Everybody,
be
let
ever
us.
in your favor.
Yeah. Everybody, let us know what district that you're accessing from. This is Doc from District 12 over here. Summer is coming.
Yeah, Mav from I think it's District 3. Not sure anymore.
All
How's everybody
right,
doing?
let's see. We got some g'days from Canberra, Australia. We got Fort Worth kicking in. Awesome. Let's see. We got Rizzo Pac-Man. We got beware of the bear market rallies from the crypto night. Oh, you were so correct, sir. You were
Oh
so
man,
correct.
he's reading our script.
I know. You guys, like, I'm done now. I don't have to do anything. The crypto night has thrown down the gauntlet. So
Turn on the
awesome.
hammer.
Nice post. Indonesia. Yeah, Mav and I were out in Indonesia back in September.
Yeah, cool place.
Very cool. Let's see. California just set over 1 million unemployment claims this month. We got Italy. Stay safe out there, brother. Dallas, Texas. Livermore, California. District 3. There we go. The Netherlands. There we go. Let's see. Well, welcome aboard, everybody. It's great to see everybody. This is week 4 of the meltdown. And today's a little bit of a bear market rally. So we'll do a lot of things today. We've got some interesting stuff for you. Obviously, we want to take your questions, answer what we can in terms of what we know. We don't know the future, but we can look at the statistics of what's happening and offer some alternatives for you. And in general, hopefully put you in a better place within the next half hour than you are right now.
Yeah.
I mean, everybody right now is watching the news. They're freaked out. Tip number 1 for you guys. Tip number 1, throwing down a knowledge bomb here. Do not watch the mainstream media to get your information. Do not watch the mainstream media. You then automatically become part of the herd and you will get faded. You will get destroyed in this market if you pick up your news from the mainstream media. It builds in the confirmation bias, and you automatically want to go along with the herd, right over the cliff, just like a lemming. So don't do that. Got lots of other pieces of advice, but listen to the price. Listen to what the price is telling you about, and believe it when the price moves in a certain direction. Don't fight it. Go along with that price movement. What you got for folks today, Mav?
Well, I think one of the things we should definitely be talking about is, the last couple days we've seen the market really rally, at least the equities market, and certainly today was definitely in one direction up until the end there. And I think a lot of that comes from this sense of stimulus, sense of, possibly we're going to get on top of this from just a policy sense. And what does that look like? Yeah, there's just some unknowns right now, but I think there's some bullish, I guess, feelings right now, where people are trying to price in where the market's going, trying to anticipate a bottom.
Oh,
All
so
of that.
people think that this is the dip,
Oh
and this
boy.
is the bottom. This is
Yeah.
the bottom to buy.
Yeah.
Guess what, folks? We're not there yet.
Nope.
We're not there yet. What did they say in the movie 300? You will not enjoy this. You will not enjoy this. This will
This
not
is
go
Sparta.
quickly. Right. This is Sparta. Yeah.
This is madness.
Yeah.
Yeah. Lots of that. Very quotable.
Now I want to watch that movie again.
Yeah.
So, you will not enjoy this. This will not go quickly. So that's kind of where we're at with this. Shall we do a little screen share here?
All right, let's see if I get this right this time.
Okay, here we go. Incoming screen.
Oh, no. All right, that's good enough.
It's good enough. It's never good enough.
I know.
All right. So what I'm doing, let's take a little trip back in time, shall we? And let's go all the way back 91 years. So I'm going to take you back. This is the Dow Jones 91 years ago. and it's actually fascinating to watch the chart and look through world history and things like that. Like you could see when this was the invasion of Europe over here, and this is you know a lot of these moves like let's see, where was the 1940 move? Oh, this was the Germans breaking through, doing the flanking maneuver around the Maginot Line. So anyway, I find that stuff fascinating. I'm a total market nerd. So here we sit looking at, this is the great financial crisis of 1929, the crash of 1929. And what I want to show you guys, because history doesn't repeat, but it rhymes. So here was the initial move up to a lower high, and then the shit got real coming down to here. Now, what I want you to notice is this dead cat bounce right here. And it got up to between the 38.2 and the 50% retracement. And then things got really ugly. And this is where the panic really kicked in, was in early November. Because at this point, people said, oh my God, it's going to zero. And then after that, we had about 5 months of just really trashy market action. And then it really, really got ugly. So from here, this is why they call this the Great Depression, because it just was horrible after this point. I mean, there was just no response, and Herbert Hoover basically didn't do anything. So our elected officials have tried to do whatever is necessary that they could. Now what I want to do is I want to take you to 1987. So some of you might have even been alive during this time. Let's see where we are here. See if I can find it, which is the next really nasty, nasty crash that we had. Hang with me here. And I think you'll see a little bit of pattern repeating. Notice what we saw here in 1987. So 87 was the second worst crash ever until this one. Notice how initial move down, lower high, and then just completely craps its pants down here. Now, what happened from the bottom? Dead cat bounce up to the same place between the 38.2 and the 50% retracement. History doesn't rhyme, or history doesn't repeat, but it does rhyme. History repeats, but it doesn't rhyme. And then we repeated the test of the bottom. This was more of the bottom retest on the closing basis, right? So we're kind of here right now, I think. So let's go to today. I'm going to pull up the straight SPX cash index. And the reason I'm pulling this up, guys, is because we're talking about a financial resource that had a notional value of $33 trillion just a few weeks ago, and is now valued approximately $22 trillion. So $11 trillion has vanished, maybe, or perhaps it's gone into different pockets. And this is what I want to talk to you guys about. What have we seen here today? Off of the bottom over the last 2 days, we've bounced up into the same area. We bounced up into the same area as the previous two worst moves ever in our life. History doesn't repeat, but it rhymes. And so this is why I'm looking for the final institutional move to the downside, which might come over the next week or two, or who knows, after tomorrow's unemployment report, it could come tomorrow. Anything could happen. So this is why, look, if you listen to the news, if you watch the mainstream media, you'll be bullish today. You'll be like, hey, man, this could be it. I'm buying in now. I want to get a piece of that bottom. And you're going to get taken underwater. You're going to get submerged and waterboarded over the next week or two. And I just don't want to see that happen to you guys. Now, how does this relate to crypto? Glad you asked that. Okay, so let's bring this over here to Bitcoin. And Bitcoin's been doing actually pretty well, but you'll see that there is a correlation here. Markets are somewhat correlated right now because, look, when the S&P 500 jumps out the window, what you have is margin calls, redemptions. You have all of this massive activity across the board, and people have to raise cash. Now, this is something that we've talked over the last couple of weeks. So everybody is going on this whole rant of like, well, Bitcoin should be a hedge against the modern markets. Well, that's true, but not until all these margin calls have finished. Now, I don't think, and this is the opportunity I think for Bitcoin, I don't think we're going to have to see Bitcoin go all the way down to here again. I don't think that we're going to have to see that. Let's just show this. So I don't think we have to retest the bottom, but I want you to watch how Bitcoin handles if and when the equity markets take a dump over the next couple of weeks. I want you to watch how Bitcoin handles that, because we're almost done with the margin calls and redemptions and all this other crap going on. And then the markets can just trade organically without that hitch to it. So watch out for that. Bitcoin by far is still the dominant. What I don't like is a lot of these charts now, even Ethereum and Ripple and Litecoin, these are all looking like bear flags right now, guys. So these, just based on the pattern, I'm expecting for them to break to the downside. So if you're looking for a better entry, maybe you'll get it. Bitcoin by far has been much stronger versus these. This is not a bear flag, but I wouldn't be surprised to see this pull down somewhere in this area. We're still correlated to the larger indices. And that, I think, is really what I wanted to say for today. So I'll shift you guys back here, back to the camera, and I'll see if you guys have any questions or if there's anything else you want us to cover before the end of today.
Yeah, I just had a quick note about some of the stimulus talk that we saw today with in the wee hours of the morning, U.S. Congress passing a $2 trillion stimulus package, of which there's going to be 250 billion allocated for direct handouts to
Hasn't been
Americans.
passed yet.
Oh, true. Passed
It's
in
been
the
it's been agreed to in principle, but it
yeah,
hasn't been passed yet
yeah,
because
true.
they're playing games.
Yeah, exactly. So we'll see. But it's the best step thus far to seeing something pass. And yeah, there's probably still some hogwash and pork barrel spending ready to be allocated. But
Okay, a little history question for all you guys out there. What happened with the TARP back in 2008? Same exact process. Congress came together and butted heads for the better part of a week. And the moment that the bill got signed, what happened? Market sold off like an SOB. Market just took a dive and it didn't stop for another month. So buy the rumor, sell the news. So this is what I think the market is doing right now is it's pricing in that event. It's got nowhere to go.
interestingly, when President Bush signed TARP into law, that was a few days, I think, before the Bitcoin white paper was published. So, little fun fact of history there. Um, we probably could see another correlated. There's someone out there that's watching this right now with absolute disgust, and hopefully, the next Satoshi or someone finds some sort of catalyst in all of this chaos to
Are you
say
talking
enough is
about
enough.
somebody watching this broadcast or
Hopefully,
with absolute
hopefully,
disgust? Well,
yeah.
hopefully not.
We're
With absolute
we're gonna
disgust.
be the paper that Satoshi put in the Bitcoin code. I don't know, but yeah,
Uh,
it's yeah.
hey, actually, you can always rewind and play
hmm
the thing from the beginning.
Yep. Yeah. So importantly, I think what is already clear from the stimulus package is that it does resemble TARP in some ways, but of the potential allocation right now of $2 trillion, the majority of it is going to Wall Street, and they're kicking up a fuss right now because they want it done on their terms. So the Boeing CEO recently was on CNBC, and he was saying, "Yeah, we need a bailout. Oh, but we are not going to exchange equity for this. No, no, no. This is going to be on our terms." So there's definitely some, yeah.
Well,
I think
remember what happened to the automakers back in like 2009.
right.
Like they had to, kneel on the pulpit and accept a bailout, and then that basically, if you remember, Obama came in and just fired the head of GM. It's like, all right, you're fired. And so people don't want this nationalization of companies, and I could understand why.
Yeah, yeah. Great question about real estate decreasing in price over the next couple months, potentially. So right now we're seeing mortgage rates stay the same if or not go up, simply because the banks are just overwhelmed right now. And even though we've seen interest rates cut, obviously, that's not percolating itself down to the actual, like home rates, because things are just so crazy right now that the banks are just so spread thin that they're not. What will be interesting to see, I think, is if we start to see sort of this freeze notice for mortgage payments in large cities, if not states, which will then effectively freeze rental rates. That I think is got to be the next step because it, based on what this bill, the stimulus bill, is allocating, this helicopter money, this fiscal bazooka approach, they're putting out $1,200 per American adult and $500 per American child. So a family of three, for instance, would get a total of $3,900 one time. So that's great. That's going to help people. But if you're already fired, if you've already been let go, and if you're struggling to pay your rent, you're struggling to buy groceries, that's not going to cut it for very long. So what we'll definitely have to see is what happens to do rental payments have to be frozen? Do we have to see more unemployment? There, the longer this thing gets drawn out, the worse this thing gets. The more austerity measures we're going to have to put in place, or like ways to help protect people from just this brutal, I guess, upsetting of the apple cart.
Everybody is focused on what's happening here and now and today.
Right.
The market is focused on what's going to be happening 6 to 9 months from now. So a lot of people might say, hey, that's stupid that it dropped, in value 35, 40%. That's ridiculous. But it's looking out 6 to 9 months, and people don't realize the set of these dominoes that are falling one by one by one.
Yeah.
Now, it's interesting that somebody brings up the issue about real estate, because real estate is usually one of those things. It's like at the end of the cycle. So what gets destroyed first is speculative wealth, and then what people have to do is that, holy crap, I've got to sell everything that I've got. And all of a sudden it starts to spiral down. So I'm anticipating that real estate's not going to be hit for maybe another year or so
Agreed.
before that happens. And
Yeah.
then we'll see rates dropping again, because nobody's going to want. And that is when I will be another homeowner.
Yeah. Yeah.
I'm going to be, dumpster diving out there looking for deals in the bottom.
Yeah. So I think the point to make is that the market is not the economy, but it is representative in some ways. It's sort of a harbinger in this case to say, as the market sells off, the economy will be impacted in the long term. And what that looks like, how that transpires, is yet to be seen or determined. But yeah, the longer the COVID-19 crisis goes out, the more deaths and supply chain disruption we see, the more that people are just afraid to go socially or to their workplace. I mean, put yourself in the role of a CEO of a Fortune 500 right now. What would it take for you to say, okay, guys, you can come on back to the workplace? Because the onus is on you to determine that correctly, determine that it's okay to bring people back into close setting together. It's okay to let people mingle and interact in a physical sense. You got to have a lot of assurances in place from both the physical side of things, but also just the viral side of things. And I don't think we're anywhere close to that. Even if we are close to a vaccine, which from what I've seen is not the case, or that for actually putting that out there to be accessible to the open market, for people to have that in hospitals and et cetera, it's going to take some time. So the only thing that combats this right now is social distancing, people staying at home, people having to gravitate towards gig economy type, environment because they have to support themselves. Unemployment,
We
helicopter
we
money.
we
Yeah,
we have just seen a tipping point in society.
yeah, yeah,
This is forcing a tipping point in society that gig economy, we're going to be looking at independence, social distancing. Look, this has been happening for years already, right? It's like look at the Discord generation that's out there,
yeah,
uh, you know, friends have been made virtually, and this is going to drive this even further, I think.
yeah, yeah.
There's so many trends that are switching right now. This is where the paradigm shifts and nobody catches it until it's too late. So open your eyes, guys. Get out of the mainstream media, take a look at what's happening, and take a real good look from a distance, and you'll see some of the things, some of these dominoes that are going to fall, some of these paradigms that are just going to shift. And again, I love this kind of stuff because it's like I love disruption. If you can get in front of the disruption, it's kind of like Indiana Jones, running at the beginning of that movie, like trying to stay in front of that great big boulder. That's sort of what it's like. I mean, it's like try to find the changes and go for it. Put some capital into that idea and be the leader.
Yeah. Yeah. So I would say there's a question about how this affects Bitcoin. It's a great question. I think this is sort of as we see, stimulus packages passed, as we see desperate fiscal policy, desperate monetary policy to try to counteract this. Sort of the closing of chapter one of this new, I guess, paradigm we find ourselves in. And what comes next is the attempt at recovery, possibly the failure. One of the worst things I think about this stimulus package is that there's a lot of lack of oversight. So there's a lot of ability for companies, corporations to run rampant and do what they want. And part of the problem we found ourselves in right now is that so many companies were taking the tax cut and the cheap capital injection of the last couple of years. They're put into stock buybacks, which is great for short-term profits, but puts them in a very vulnerable position if we see a market correction like this, especially for industries like the airlines. They are extremely vulnerable right now. So yeah, it's going to be a very interesting time as we start to move forward into what looks like, what does the economy, what does our society look like, post initial crisis as things start to ramp up in terms of, does the virus get worse? Does the economy get worse? What does that look like? How do we respond? And I think that's, as it relates to Bitcoin, it's Bitcoin's position to play against that or to play a constructive role where everything else is destructive.
There's a great analogy that I read the other day, which perfectly sums up this situation. If you're on a beach and if there's a tsunami coming, what happens? What happens to the water on the beach? It's
That,
really strange, right? I mean, all of a sudden you see it recede and it pulls way the hell out, right? If you're actually on that beach, if you see the water receding like half mile out from shore, you'd better turn around and run because what's going to happen is that tsunami is going to come in. It's pulling it in, it's like stretching the rubber band and then boom, in your face it goes, right? And we could be seeing actually the same thing happening, right? So this is kind of the alternate proposition here is that we're going to have a really difficult few months. I don't think that is going to be anything that we can do about. We are not going to V bottom from this. But once we price in the future and once we get that very, desolate feeling bottom, whenever that is, once we're out of sellers at that point, then with to some people's points here, like if they're printing all this money, interest rates are going to be zero. People are going to be looking for a source of yield. So after this is over, people are going to say, well, look, we have all this cash around the system. It's got to go somewhere. And the only place that's going to provide any yield is going to be a risk asset, such as equities, such as cryptocurrencies. So we could see that tsunami effect pulling back over the next few months. And then all of a sudden, when nobody wants to go long, it will feel ridiculous to go long at that point. But that will be the bottom. And that's the way it felt back in March of 2009 as we hit S&P 666. It was like, well, this is stupid buying stocks. I mean, I don't know who would buy a stock. And it just turned around and bottomed. And, 400% later, we eventually had a high. And that's what will happen. So it's kind of a combination of those two. There, either we're looking at a rough few years in a depression environment, or they're going to goose this monetary policy so hard that the price will have no choice but to go higher of all risk assets.
Yeah. Yeah. I mean, just look at the volatility. We saw a 40% drop the other week. We saw an 11-point gain yesterday. I mean, that right there is a moneymaker. Buy and
Oh,
hold is not good in a volatile market, guys.
buy and hold is dead. This is going to be a trader's environment for at least the next 2 years.
Yeah.
Once the bottom comes in, when it feels ridiculous, when it feels suicidal to go long, that will be the time to start acquiring assets. And nobody will do it. Nobody will do it because it won't feel right.
Yeah. Jay and Ricky are bringing up a really interesting point about the digital dollar that's been either proposed or talked about in draft legislation of the stimulus bill. And just a quick note on that. I think we are far away from seeing a digital dollar that individual in the US economy, especially outside of the US economy, would have access to. What we're likely going to see first is something that is between the banks and the Fed. That's how we've seen it implemented in places like Sweden. It's a tool for monetary the easing that we're seeing. Um, will we see an actual implemented, regulated federal coin, federal dollar anytime soon? Probably not. And probably they want to get that right. So again, this is Bitcoin's time to gain because it works. It's already out there. It's in people's hands. People are securing it. So yeah, I think we're far and away from seeing central bank digital currencies that have the same sort of protection, same sort of ease of use and liquidity that things like cryptocurrencies have. Yeah, it's gonna be interesting. That's, I think, putting it lightly. But yes, they will eventually be out there, and eventually they will make their way into the hands of individual users. Especially, let's consider right now, cash is maybe the best safe haven right now, but it's the worst spending vehicle because you cannot spend cash right now, or not easily. You're not going out to stores and grocery stores and all that sort of stuff in the same way that you used to. And even if you are transacting with the dirty, literally dirty money, it's not. I don't think it's as popular as it used to be. So yes, there's definitely an impetus towards a more digital focused uh, currency spending vehicle, and something that is just digitally native. And especially as people isolate more and people need to be working remote more and transacting remote more, that just furthers the use case of a digital currency like this. So it's really interesting. I think this whole crisis has really, both from an economic perspective, but also the societal consequences that we've seen because of the virus. Both of these have really strengthened the case for digital currencies, crypto technology in general. We need to have secured payment methods and means of stores of value, etc. For we need to have the internet have its own transaction vehicle, and this has been very interesting to see all these sort of pieces line up. And even though things are volatile right now, again, the market's not the economy. The market is not a good or bad judgment of what Bitcoin is in this moment. So yeah, it's very interesting to see how this transpires.
Hey, just a quick little announcement for you guys. Hopefully you can see this. Next week, there's a Tech Wizards conference. So this is kind of lying in with the whole notion of, trading and everything like that. That's going to be So if you go to readysetcrypto.com/wizards, this is a free conference you can sign up for, get the recording of it later. I am presenting on Thursday. So next Thursday, I'm going to do an hour on a tech related topic. I haven't exactly figured out what it is, but it probably is going to have something to do with fractal energy, I would imagine. So go out to readysetcrypto.com/wizards, get signed up for this, please. And check it out. It's all free. And there's a lot of big name vendors, not myself, but a lot of big name vendors that are going to be, uh, you know, presenting during this. And so you'll get the archive from this as well too. So readysetcrypto.com/wizards. Thanks, guys.
So you're going to be talking about how to trade this market.
Well, yeah, I think I'm going to be showing some of the technology that I use to trade this market, regardless of which market it's in. I mean, a lot of things I do are very similar across markets. Really, just if it moves, you can trade it, right? Sounds like a Arnold. If it bleeds, we can kill it.
Yeah. Yeah.
So, hope to see you guys next Thursday.
Yeah. Very interesting conversation about how to. I mean, we really do have to come up with ways and strategies of looking at this market and how to trade it for one, but definitely speculate on it, react to it, and try to be proactive as to where it's going. The whole conversation has changed in the last couple months. So yeah, it's it's a journey as much as the destination. But yeah, that's cool. I'm looking forward to that. A lot of questions
Yeah.
about holding.
Yeah. Guys, I really think that it's going to be a trader's market over the next couple of years. If you think about it, really, it has been a trader's market for the last 2 years because, we're going down, up, down, up, down, up. If you understand how to zero in on one time frame and create edge on that time frame, whether or not it's through derivatives like futures, which are leveraged and allow you to use a lot less capital than trading the spot, or if you use options, which allow you to, do a lot of different things, such as give you the business model to do, like selling puts would be similar to running an insurance company, or covered calls would be similar to being a landlord and collecting rent from your tenant. So it allows you to trade and be wrong in terms of your direction and still win, which is tremendously powerful. It's a little immature in the crypto space yet compared to the equity space. I've been trading options in the equity space now for, gosh, coming up on 20 years. And so they're very advanced with that. So a lot of those technologies will come over to crypto and will give you the same levels of efficiency in that when we start to get more competitive in that space. But some of the early adopters are out there and doing quite well with that.
Yeah.
So it's going to be a trader's market, I think, for the next couple of years. Certainly, at some point, there will be a phenomenal buy the dip opportunity for those of you that are buy and hold. We will get another 2017 in the works. And, so if you're patient, you can wait until that point. But I think if you have a shorter time perspective, somebody like me, then trading actively is the way to go.
What would you say you have to do in this sort of market? I mean, like to make consistent income to, almost have I would say, job out of this, especially if you're unemployed right now or, you're underemployed, your hours have been cut. What should you be doing as it relates to the market?
Most people do the exact opposite of what they should do. Most people, what they try to, they become a jack of all trades and a master of none.
Mhm.
They've got little piles all over the place. And they're like, because they've been taught since they were this high to diversify, diversify, diversify. And so what that means is they interpret that as being scatterbrained, just do a whole bunch of little stuff all over the place, which there is some power to that, but the way that people normally do it is incorrect. So what I usually tell people is pick one thing only, one ping only, Priscilla, and just get really, really good at one thing. What I found is most professional traders, like those that trade like the S&P 500 options, will sit in one stand all day long in one square foot of area and they focus on one thing and they just hammer it again and again and again because they're really, really good at that. And it sounds boring, but trading, if you're trading to get excitement, if you're trading to get that adrenaline rush, you're doing it wrong. This should be a business. And if you're going to do something as a business, you've got a business plan, you've got discipline behind it, but you're also really good at one little thing. That's all it takes, is to be good at one thing. You don't have to stress yourself out. You don't have to try to be, again, like, God's gift to everything that walks or crawls and trades. There's so many different ways that you can do this. That's what I would that's what I would explore, is to try to find the different ways that maybe you can excel at.
Cool. Awesome. Well, I think we just about wrapped up here, guys. But we'll take one or two more questions here, and yeah, a lot of comments about what to hold, or what asset is going to do the best. Honestly, if a crypto asset is in the top 10 right now, um, it's probably going to do okay. Um, it's all about speculation against the larger markets, as we've been saying for a long time. Um, yes, some will do better than others, and yes, coins like Bitcoin are well positioned to just respond to what the larger markets are doing and act as a hedge. But yeah, it doesn't mean that it's going to be the best overall, that it's going to do the best overall. As someone has pointed out, yes, it's not the best at being a currency. Not what I was trying to position it as. It's just it's the flag bearer right now, and that helps it put itself in a position that it does well, especially inversely against the larger markets. Again, we're still developing that hedge narrative. It's not something that just gets built overnight or proven overnight. But yeah, it's going to be years in the making right now. But that's the opportunity. That if you're asking about what to hold right now, even though we've clearly said that it's going to be a trader's market, if you have no intention of trading anything, just buy and hold the majority of the top 10. I think that's the strategy that's held you through pretty much the last couple of years as well as possible. And it's definitely going to do just as good going forward. So,
Right. Right. People talking about correlation, we will lose the correlation. If you go back a year ago, there was no correlation between the S&P 500 and Bitcoin or any cryptocurrency. Zero. Zero correlation whatsoever. They completely independent of each other. The only reason right now that they are correlated and tied at the hip is due to all of these margin calls, redemptions, just ugliness that's going on out there, where brokers are calling up people saying, you are so underwater on this position, you have to raise cash right now, or we're shutting down your account and we're going to come possess your house. So, what the hell are you going to do? You're going to sell off the assets that you don't really care about. So, those little speculative assets, and oh, by the way, that's probably going to be Bitcoin or things like that. So, that's why that happens. That's why everything gets taken underwater and suffocated. Everything gets waterboarded during a crash. Go back and read history. Go back and look at what happened in 2008, when during the crash, gold got thrown out the window. Gold, of all things, got thrown out the window with everything else. That doesn't make sense, but it was the first thing to rally. And so this is what I'm saying here, is that if there is value in this, if cryptocurrency or Bitcoin is going to be digital gold, we're going to know about that really soon, because we're going to be pushing lower and lower and lower on the equities markets. And if we get that divergence, then we got something. Then there is value. There's tangible value behind this, and we'll know it real soon.
cool. Um, so Steph just brought up an interesting point. Yes, we are launching a new service soon. I think we'll officially take the wraps off of it next week. But for those who are curious, we have it over at readyset.trade. And so this is going to be our, we're trading the larger markets, we're trading equities, as Doc was
Why
talking about.
don't you just show them the page?
Uh,
Go ahead and
I,
show them the page. We can. I
did,
mean,
did
we'll
I,
do we'll do the full launch next week. But
yeah, let's make sure Zoom has a way of sneaking up
so
on me.
so Vim, I don't think it's going to correlate when it crashes again because the initial crash has already happened. What will happen is you'll see risk assets that are of value start to diverge. You'll see that divergence happen. So this is where you need to watch Bitcoin very carefully in the next month.
You guys can see how much of a tab monster I am, but yeah. So this is Ready Set Shot Trade, and for those who are curious, you can head over to ReadySet.trade. And yeah, what we're trying to do is boil everything down to just a simple metric, a simple method around consistent growth and consistent profits. We're doing that through the larger markets again. So this is not crypto focused. So that's why we're careful to make the distinction between Ready Set Trade and Ready Set Crypto. But yeah, what this is meant to do is help you build a system around what we'd like to target is $100 a day. Obviously, you can scale that from $10 a day to $100 a day to $1,000 a day. We're trying to help you have the tools to do so, especially in a volatile, uncertain market where consistency is the, the the exception, not the norm. So for those interested, we have two levels of service: Pro and Elite. Elite is sort of like our Omnia for Ready Set Crypto, where it gets you access to all of our classes, our newsletter, etc. Pro gets you access to our trade signals and our Discord and the weekend newsletter. So you should check to make sure that you can trade U.S. markets because that's where we'll be primarily focused. We'll eventually be building this out as we are literally just getting off the ground. But for those interested, I just put up a coupon code for 10% off Wizards, same URL that Doc was just talking about for his talk. That will get you 10% off either our Pro or our Elite membership. So if you're interested, either reach out to us at support@readyset.trade or just come check us out. So hopefully that's a little bit interesting for you guys, and we'll talk more about this next week and give you the full spiel. But yeah, we're really excited. We think this is a perfect time to be launching a service like this because we're trying to tackle this uncertain, chaotic market in the best way that we know how, with consistent gains, with consistent returns, and just consistency in general, and helping you build a system so that you take the emotions out of this extremely emotional market right now. So yeah, we're really proud of this. We're really excited. Hope you guys enjoy this. Hope you dig your teeth into it a little bit. We'll eventually have some more free stuff for this as well. So we'll definitely be talking about this more. But yeah, very exciting. Cool. All right, let's get back. All right. Anything
So
else?
Philip is asking, what is the best website to trade stocks? I don't know if you're asking about what is the best broker to do so. Let's assume that you're talking about that. I believe that the days of trading stocks is over. What you need to do is to learn how to trade the stock derivatives, such as options and futures. So unless you've got an enormous pile of money, this has been the problem for the past 10 years, is that stocks got inflated. We didn't get inflation into the general economy. We got inflation into asset prices. And imagine what happens if we throw another $6 trillion at this thing. Eventually, we're going to see new highs and completely an unaffordable stock market. And it's just going to be ridiculous. And so, what you've got to do is you've got to start working on those derivatives right now. Options and futures is the future. This is what I've been involved in this for 20 years now. It used to be a black art 20 years ago. Nobody knew what the hell I was talking about. And now you're going to see them. Even Robinhood trades options. Now you're going to see everybody walking around, talking about the Black-Scholes theorem in 5 years.
Yeah.
So, that's the new paradigm, guys.
Yeah, if I were to learn options, Robinhood is kind of a good place to just get your feet wet with it. Obviously, if you can download and use Robinhood. But yeah, they do a very good job of demonstrating to you sort of the risk chart or the risk analysis for your call or your put, and just where you need to break even and all that sort of stuff. So it's a good place to start. But if you need more power, as we are obviously doing with this service, that's where you start to move with more managed brokers and things of that sort. So yeah, it's it's a process, but if you're just getting your feet wet, yeah, that's potentially one place to start. So yeah, trade in both directions. Excellent. All right. I'm glad we say these things over and over again, and sometimes you got to make sure they stick. But yeah, it's very important.
Yeah, I don't want to be a bull or a bear or anything like that.
Yeah,
I just want to trade in the direction of the anchor chart swing.
just make money.
Say,
Yeah.
yep, just
Cool.
trade in the direction of the trend.
Yeah.
So,
Well, cool. Well, thank you so much for hanging out with us, guys. As always, stay rational, keep those emotions in check. We're probably going to see some interesting finish to the week with the jobs report out tomorrow, all this sort of stuff. It just doesn't stop. But as Doc talked about, stay away from the mainstream news. Their job is to get you to click on stuff, get you to react to stuff. Instead, try to be rational, be detached from it, and make your own decisions. At least have some sort of trading plan. And yeah, we're in this together. So exciting times, chaotic times. We'll make the best of them. But as always, we appreciate you guys' time. We'll see you next week. Have a good one, guys. Cheers.
adios, amigos. See you guys.